Welcome back everyone to episode number 54 of Turning $100 into $1 million, the series where I risk a whopping $100 of my own money in an attempt for your entertainment to turn it into $1 million. We do have another stock to look at a little bit later on this episode. It is a very popular stock, and usually we look at the upside, right? Usually we look at the acid runners, the big rallies. In this event, though, we actually want to look at something that tanked and what the cause of that was, and we're going to be looking at that stock if you haven't seen the title already. But first, we will take a look at the profit and loss numbers. So, AMC is going to be standing at 984 down, or 26.45% down. RF 524 up, or 24.13% in the green. DGLY now down 39.16 or 43.1%. We have Viacom up 12.90 or 84.87%. OXLC down 4.64 or 11.65%. Let's look at the charts now. So AMC dropped 16 cents plus a little bit more after hours, and it's been on the downtrend now, and I could be wrong about AMC, right? I could have been wrong for saying that this stock will now have some upside after reopenings of theaters and having cash on hand and buying some shares of stock to try to save the company from going bankrupt. So I don't know if that you could say this is a good example, as the market is definitely uncertain right now and in a downtrend. You can't necessarily say that this was a perfect hypothetical scenario, the perfect circumstances. Most stocks are dropping right now. Very few markets and industries are going up. So it'd be very hard to say that this was the perfect circumstance for this stock to be on the upside. And plus, also, I never said that the stock couldn't have more downside. Definitely, it was lower before, but I just think from now it will go up. So we'll see what happens. But it is down for the month now. It is down. See right there. It is now down nearly 50%. 50% or 235 for the month. 6 months there, you could see that bottom, but if you get a better picture, you'll see what I'm talking about, that there could have been more room anyways, regardless of whether or not the market was in a poor condition. You see that in the year to date, back in April is when it had these bottoms, but it never broke $2, so $2 definitely does seem to be some support. The low 2 and change, 2 teens, definitely some support there, so I think this stock hopefully will not crash through and break through that $2 mark. Then you have RF, very nice, 10 cents up, plus a little bit more action after hours, actually quite a bit. Another 1.5% after hours. 5 days, it is still in the red though. 1 month, it is way up for the month. We're looking at over 15% for the month there. 6 months maintains the green. Year to date, see the uptrend going on right now. Despite the poor market conditions, that's definitely bodes well. It's a good sign. Then you have DGLY still holding strong above $2, which is good, especially in these market conditions. It'd be pretty tough for a penny stock to survive, but it's doing it. And for the 1 month, you get a better picture of what's going on. It had that spike, and then it came off that spike. So this stock is very uncertain. Really, no one knows where it's going. I do think a Biden presidency would be better for the stock with any police reform legislation, things of that nature. A Biden presidency, the stock would probably perform a lot better. And then we'll look at Viacom up 44 cents, another 44 cents, 1.5%. It is down for the last 5 days though. 1 month it's up. 6 months, gorgeous uptrend. We love looking at that uptrend. OXLC down just a cent, then ticked up after hours, so break even basically for the day on Friday. 5 days it is red. 1 month it is red. 6 months basically stagnant, just a little bit choppy, up down. And now we're going to be looking at the stock I want to take a look at in this episode. It totally crashed, along with another popular social media platform as well. But this stock, what happened, what's going on? Well, the stock, first of all, is Twitter stock down over 21%, 11.07. And I don't know if you guys remember, but if you remember, towards about earlier in the year, midway through the year, Mark Cuban actually scooped up a ton of Twitter stock. He invested, I believe it was like $1 billion he put into Twitter stock. Don't know what price he got in that, but I'm sure he might be a little bit nervous right now. But you could see the significant crash. It does still maintain a gorgeous uptrend for these last 6 months, despite that crash. It does still look very good and has a nice rally going on right now for even the last year. It recovered quite quickly. Pretty good recovery after the bottom there back in March. 5 years, it does still stay up, but I'm not a fan of this stock to begin with. I would never invest in this stock. No dividend payout, and really not too much growth left for this stock. You would have had to gotten in back in the day, maybe pre-IPO day, and maybe around here back in 2017. I would never invest in this stock. If I were to do something like a social media platform, I'd probably put money in Facebook, but I don't have any Facebook stock, although my index funds that I hold do have quite a bit of stake in Facebook stock. So what's going on? Well, here's an article here. Twitter shares plunge as user growth slows, so they're not getting too many daily users anymore as they were. Despite more people home and using the internet and social media, you would think it'd be the opposite effect when you have more people working remotely and more people working from their computer. That's simply not the case here. So Twitter had 187 million daily users on average in the third quarter, but below analyst expectations of 196 or 195.6 million rather. So there's Twitter there. You see the change that we just looked at. And Twitter posted much stronger than expected third quarter results thanks to surging advertiser demand. However, profits slipped and daily users came in lower than analysts expected, so a bit of a give and take right there. San Francisco company earned $28.66 million or 4 cents per share in the July-September period, so it was still a positive earnings. It was still a positive earnings per share, EPS, but that is down from 22% from a year earlier due to higher expenses in part related to COVID-19. Excluding one-time items, earnings were 19 cents per share. Revenue did grow 14% to $936.2 million from $823.7 million. Then we get into the user data. So Twitter had 187 million daily users in the third quarter, but below analyst expectations. According to Jack Dorsey, Twitter's CEO, we have grown our daily audience by 42 million in the last year as people all around the world came to Twitter to find out about the topics and events they care about most. I'm pleased. MDAW grew 29% year over year to 187 million, driven by global conversation around current events and product improvements. So, a bit of a give and take with the revenue and the daily users there. I would have thought kind of even out, but in fact, the poor users' performance seems to be very negative news for this stock, a very negative catalyst. But just wanted to take a look at Twitter, just because it was the talk of all talks on Friday. And let's look at the net account value now. We have 170.22 as the net account value. It was in the 160s last time I checked, but the good thing, it is still maintaining above 170, not bad. And as always, if you would like free stocks, go ahead and use my link down below in the description. Get 2 free stocks, all on me. One valued up to $1,600, all free, all on me. Go ahead and use my link down below. And have a happy Halloween as well. But looking forward to seeing you in the next video.